In a manner quite similar to this, just moments before the imminent earnings call, Wedbush, a financial firm, is offering a forecast that implies dire consequences for AMC. Hello everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads, and also enter our giveaway. But before that, alert: this is not a financial advice video. Their assertion is that if AMC fails to transform APE into AMC, according to their analysis, the cinema chain could find itself on the brink of bankruptcy. Wedbush is also underscoring the likelihood that AMC will struggle to replicate the positive outcomes seen in this current quarter. They are predicting a notably feeble performance for the upcoming third quarter. During the prior quarter, analysts from Wedbush noted that AMC had made significant progress in reducing its debt burden. However, looking forward, there are doubts about whether this trend will continue into the third quarter and beyond. It might have slipped some people's minds, but the third quarter reports will soon reveal the actual revenue from Barbie and Oppenheimer, a pivotal point considering that this week marked AMC's most profitable period ever. Notably, this isn't limited to 2019 or the pre-pandemic era. We're referring to the most lucrative week in AMC's over century-long history. Wedbush has also emphasized that AMC managed to secure a substantial discount. Specifically, they hold only 34% of their existing debt due to this discount. Nonetheless, there is a clear need for more funds, and the avenue for acquiring them involves either issuing more APEs or converting existing APEs into common stock. In a strategic move during the last quarter, AMC successfully negotiated a $42 million repayment for one of its high-interest loans at a discounted rate of 34%. This loan currently stands at $1.1 billion. Interestingly, Wedbush argues that AMC doesn't need to reinvent the wheel to become debt-free. They merely have to replicate the strategies they've already employed. The firm also points out that AMC amassed $34 million in the quarter through the issuance of 21 million APE shares. This action increased the total count of APE shares to 278 million, contributing to the overall limit of 425 million shares. However, they might have overlooked a significant benefit of this share issuance: the participation of institutional investors, including Antarctica Capital, which seized the opportunity to engage in trading and profit-making. A pivotal question arises: will institutional investors maintain the same level of interest in acquiring the remaining APEs on the open market? Such interest would provide AMC with the necessary capital to bridge financial gaps and potentially resurface as a stronger entity. This is where a revolutionary aspect comes into play. Wedbush does not anticipate the conversion of APEs into common stock. This bearish outlook on the stock hinges on the assumption that AMC will not succeed in convincing the chancellor to execute a reverse stock split and issue additional AMC common stock along with the remaining APEs. It's quite astonishing, isn't it? The initial expectation was that AMC possessed APE shares as a lever in its legal argument to convert these shares into common stock. However, after failing to achieve this in the first and second attempts, the situation appears to have shifted. Wedbush doesn't foresee AMC convincing the chancellor to proceed with a reverse stock split or the issuance of the remaining APEs and more common stock. This revelation leads to the consideration that if AMC's case is unlikely to succeed, individual investors ought to heed Wedbush's assessment. Certainly, as the market concludes today, a more detailed exposition of Alamran's expectations and plans will be unveiled. There, the worst-case scenario will likely be outlined, along with contingencies if the revised proposal is not approved. Rest assured, there is likely a plan B in place. After all, it wouldn't be reasonable to assume otherwise. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching,